Now let's talk about Commonwealth tax relief. Okay, for company, let's talk about that now. Okay, let's Commonwealth tax relief. Commonwealth tax relief. Okay, for companies. Now, Commonwealth tax relief. Now, there are two various companies that are given, or maybe non-Nigerian company and Nigerian company. One, we deal with a Nigerian company. According to Section 33, subsection 1 of CITA, that's Company Income Tax, okay, provides that where any Nigerian company has paid or is liable to pay tax under Company Income Tax Act, Cap 60 rather, LFN 1999, in any year of assessment, and it can prove the satisfaction of the Federal Board of Inland Revenue that same profit or part of the profit or which the company has paid or is liable to pay Nigeria has been subject to Commonwealth income tax revenue shall be entitled to tax relief. What they are saying is that a Nigerian company, maybe doing business outside, okay. Now it has, if you are able to prove that you have already paid in Nigeria, maybe you have your branch in, maybe let me just say, in any of these countries, maybe you have your company in Pakistan or Belgium or France or Canada, okay. Maybe one of your branches in Canada, and are able to prove that you have paid in Nigeria already, okay, under the Commonwealth relief, okay, according to section 33. Oh, okay, section 33 subsection 1 of the CITA, Company Income Tax in Nigeria, and able to prove in Canada that you have paid. Of course, you'll be subject to Commonwealth relief there, which means some part of your profit will be given to you. There's a calculation for that, okay. There's a tax rate by the Commonwealth relief this thing, which is calculated. I think it's calculated that your tax rate should be, according to Commonwealth, your tax rate should be tax paid or liable paid or payable all over the total tax, okay, times 100. So that's it will be subject to such calculation. Then your relief will be given to you. So that's just what we're trying to say now. So okay, if you're able to prove, I've just said it. So that's it. Now, the rate of the tax relief can be determined as stated below. Okay, 1, where Commonwealth rate of income tax is not more than 1.5 of Nigeria income tax rate, then the relief will be available at Commonwealth rate of tax. You understand what I'm trying to say? If the income tax is not more than 1.5, then 2, where in other cases the relief will be liable, will be available, okay, at half of Nigeria income tax rate. You see, you have to go through a lot of hurdles, okay. So that is just this thing there. Now, what about the non-Nigerian company? Now, let me just go non-Nigerian company. Now, section 33, subsection 2. The other one is section 33, subsection 1. That of section of 33, that for non-Nigerian company. Section 33 of subsection 2 of CITA, that's Company Income Tax, says that also makes provision for non-Nigerian company, okay, to get relief where the company has proved, okay, to the satisfaction of Federal Board Inland Revenue that the same profit on which it has paid or is liable to pay Nigerian taxation, that it has also paid or is liable to Commonwealth tax, okay. The relief is granted as follows, which is the same thing. Maybe a Nigerian company situated in Nigeria, in Canada, is able to come for relief in Nigeria here. Okay, the law of Nigeria will, based on the Commonwealth tax relief rate, will be applied. Okay, this is how it is being applied. Section 33 of subsection 1 talk about Nigerian companies. While subsection 33, the subsection 2 of CITA, both of them of CITA, Company Income Tax, now talk about non-Nigerian company. Now, how does it for the relief is granted? How does the relief is granted? 1, where the Commonwealth rate of tax is not more than Nigeria tax rate, the relief will be granted on 1/2 of the Commonwealth, 1/2 of the Commonwealth rate of tax. 2. Where the Commonwealth rate of tax is more than the Nigerian tax rate, the relief is granted at amount in which Nigerian tax exceeds 1/2 of the Commonwealth rate of Nigeria. So now you understand the point. Where if you bring your own there, where Nigeria tax, that's a kind of we call it best of judgment. That's Nigerian law will apply, which means where Nigeria own law or where the Nigeria own charge is high, that of Nigeria of course will be applied so that Nigeria can get more money into her own post to run its expenditures. That's what we're talking about. So it is run this way. Okay, Nigeria rate, Commonwealth tax rate can be ascertained, okay, by dividing the amount paid or payable as per the total profit. That is, I have said the tax rate. Tax rate is equal to tax paid or payable all over total paid times 100. Thank you very much, and God bless you. That's how it is. Okay? Thank you, and thank you, and thank you.